Turning now to the economy and an important decision that could have a major impact on your wallet. The Federal Reserve expected to decide whether to raise interest rates today.
But the recent turmoil in the banking sector is casting a large shadow on the meeting. Some on Wall Street predict the Fed could pause the rate hikes it began a year ago to tackle soaring inflation.
NBC News business and data reporter Brian Cheung is here to help us break it all down. So help us understand the dilemma that the Fed is facing here as it tries to battle inflation with this banking crisis. What are the possibilities?
Yeah,
today?
Joe Zinkley, I mean, it was a really complicated picture for the Federal Reserve going into this meeting, but it was already complicated prior to all the banking issues because we were dealing with high inflation. And the story for the Fed was trying to raise interest rates, make borrowing costs more expensive to deliberately take steam out of this economy to lower prices. But one challenge is that one of the dominoes to fall that led to Silicon Valley Bank's collapse was higher interest rates. It wasn't the whole reason, but it was part of it. So because of that, the Fed needs to thread the needle on this. If you don't raise interest rates high enough, then you might not take care of inflation. But if you raise interest rates too much, more banks might implode. So the expectation is for the Federal Reserve to either not raise interest rates at all or raise interest rates by the smallest increment that it usually does, which is a quarter point. That's the expectation. You have some on Wall Street saying they might not move, but most of them expect a small quarter percentage point move.
So, Brian, with all of that, is there any expectation as to when interest rates may just level off?
Yeah, no, we really have no clarity into that. And the challenge is because of the uncertainty around, A, how long these banking issues are going to rattle investors and the depositors that have money out there. And then secondly, what's going to happen with inflation? It's been coming down. It was at 9.1% at a yearly pace in the summer last year. It's gone down to 6% as of the last reading that we got covering the month of February. But economists say we really need to be somewhere closer to 2%. So we're far away from mission accomplished. And by the way, for Americans that are wondering, what does all of this mean for my wallet? Well, it means that interest rates are going to remain high. Credit card rates, mortgage rates, auto loan rates going to remain very expensive.
All right, Brian, appreciate your analysis. Thank you so much.
Thank you so much.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.